To kick things off, we have a keynote and a special talk on Europe's competitiveness and strategic autonomy in digital finance. Right now, we're standing in a world where it's very competitive. Asia's really taking over. We've got Dubai, we've got Singapore, really presenting themselves as the regulatory jurisdictions for crypto companies to come to that will be friendly and such. The United States is now declaring themselves to be, well, President Trump is declaring himself to be the Bitcoin president and that the US will be the crypto capital of the world. We'll see if that will actually happen. But right now, Europe also wants to be a player in the game, and the rise of the digital asset economy, the pursuit of a digital euro, and the need for resilient sovereign infrastructure raises profound questions for this continent. How can Europe remain open for business, yet strategically independent in its financial technology? The stakes are nothing less than control over Europe's data, its value chains, and its future prosperity. We are incredibly privileged to kick off this discussion with a keynote from a man who is arguably the single most influential figure in shaping the current regulatory landscape in Europe. Our speaker has spearheaded the European Commission's FinTech Action Plan and Digital Finance Strategy, and his work forms the bedrock for digital assets across the continent. He's widely referred to as the architect of both MiCA, the Markets and Crypto Assets Regulation, and DORA, the Digital Operational Resilience Act. So please join me in giving a warm welcome to the advisor at the European Commission's Financial Sector, Digitalization and Cryptocurrency, we've got Peter Kersten.
Hello, good morning. I was asked to talk about Europe's strategic autonomy and competitiveness and how we're going to preserve this in the digital age. And before I get into that, I first have to thank Thomas here, but also Clara, who have persistently over the years asked me to come to Liechtenstein and to talk about digital assets. And my visit here is much overdue. The reason why it is much overdue is because while people refer to me as the architect of MiCA or the father of MiCA and DORA, and while I may have had something to do with MiCA's inception and its negotiations, architects need inspiration. We do not really, the ideas which we implement, the designs which we make, do not fall from the sky. We get inspiration. And one of the original sources of inspiration for European crypto policy and crypto regulation was Liechtenstein. And I think we have to, I think we have to give credit to this. And so in a way, my visit here today is a bit like a pilgrimage to the birthplace of crypto policy and crypto regulation. It was the vision that was held here in Liechtenstein that set things in motion at a time when serious policymakers, serious regulators wanted to have absolutely nothing to do with blockchains. Liechtenstein said, no, we can seize the opportunity, we can create a framework around this. And it was your vision that inspired us. Now, visions, if you are in government, if you're in a policymaker, visions are dangerous. A former chancellor of Germany said that if you work for government and you have a vision, you should go and see a doctor. I decided not to go and see a doctor, although maybe I should have. I decided to act on my vision to help Europe along in a blockchain-based future. A lot of the inspiration came from Liechtenstein, but also some other countries which were first out of the box, like, for example, Bermuda, but also Malta, were early on in crypto policy and crypto regulation. And while you can't necessarily transpose everything that was done here, for example, civil law matters on crypto, that does not necessarily translate from a country of, 40,000 people to a region, a multi-jurisdictional region like the European Union of 450 million people. A lot came from here. Yesterday, thinking about what I was going to say here, I read that Liechtenstein is the least visited country in Europe. I think this is entirely unjustified. And anyone in the worldwide crypto community should pay homage to the birthplace of crypto policy, and they should visit Liechtenstein. I think many of you would agree. It's going to get very busy if they all come. Now, enough about why I'm here. MiCA. Where are we and what are we going to do? MiCA was proposed in 2020, which about the same time you actually enacted the Blockchain Act here in Liechtenstein. So we proposed it then, we negotiated over it for almost 3 years, and it really has been in operation, the stablecoin parts, for just over a year, the parts on other crypto assets and on crypto asset service providers have been in operation since the beginning of this year. So we're now 10 months into that part, and that part, the crypto asset service providers, is the most important part of MiCA, in my view. And 10 months is not that long for European regulation. So it's still early days. We see member states coming up to speed with licensing of or providing MiCA licenses to companies in quite a few member states. Some member states haven't awarded any licenses yet. I was surprised to learn that Liechtenstein hasn't yet awarded any MiCA licenses, but I am comforted and confident that that will happen very, very soon, because really you can't move from being the first ones to being the last ones. So I would encourage the people, the colleagues here in Liechtenstein, to get on with things and to open up the opportunities that MiCA provide, including passporting throughout the European Union, to make that available to the companies that are licensed here. So we are 10 months into MiCA application, and to those of you who hope that I would be talking about a MiCA 2, let me disappoint you. I am not going to talk about a MiCA 2. Why not? Why should we have a MiCA 2? Should we have a MiCA 2 to relitigate MiCA 1, to deconstruct what we've built, to go after the past debate? Or should we have a MiCA 2 to fill in the missing gaps, what we haven't done yet, what isn't working? I don't know. MiCA is not perfect by any stretch of the imagination. Wherever I go all over the world, people come and talk to me about defects in MiCA. And I always have to say, I know, I've heard this before, I know very well where the defects of MiCA sit. But despite the fact that it has defects, it is much better than having no MiCA at all. And perfection is not of this world. It is the result of a political compromise between different perspectives on crypto assets and blockchains. And I believe that MiCA, the way it currently is, and DORA, by the way, the Digital Operational Resilience Act, are as good as it gets when it comes to policy making and regulation. And it is pretty good, because to date, and I'm going to touch wood because I'm superstitious, Europe has been spared of major crypto excesses and major crypto hacks. Now, that may have something to do with the fact that Europeans, by and large, are much more level-headed than people in the Americas and that people in Asia. That may have something to do with it. but also because we have more robust policy and regulatory frameworks. And I like to believe, maybe I'm kidding myself, but I like to believe that our policy and regulatory frameworks contribute to this stability, to preventing these excesses. That said, MiCA is not complete. It doesn't cover everything. It, for example, does not cover crypto lending. It does not really cover NFTs, although I can have a very lengthy discussion as to how NFTs are mostly covered and rather than not covered. MiCA does not cover staking, although it covers staking in a way, but that's a very technical discussion, which I'm happy to bore you on at some other time. And MiCA does not cover decentralized finance. But is this a problem? What is the problem with these issues? Is there a problem with crypto lending? Is there a problem with NFTs? Is there a problem with staking? Is there a problem with DeFi that merits a regulatory intervention, that commands regulatory intervention? I am not convinced, or I am not convinced at this stage. And that's why we are not working on a MiCA 2, despite the fact that some people want a MiCA 2, because those that are shouting the loudest for a MiCA 2 actually want to reopen the negotiations, want to reopen MiCA, not to move forward, but to move backward. And all of us who wish the blockchain ecosystem the very best should not provide those that want to deconstruct MiCA the opportunity to do so. And maybe we should also provide the rest of the world an opportunity to catch up. We see big movements in the Middle East, in Asia, in the United States. I was there last week. They are very, very self-congratulatory about their ability to adopt a stablecoin bill, which I think is a very big achievement. But the stablecoin bill they've adopted in the United States, genius, big ceremonies, big celebrations, everything, is just one title of MiCA. It's actually almost a carbon copy of MiCA Title 4 for the technicians. MiCA is much, much broader. So we need to let the rest of the world to catch up a bit. But that does not mean that we in Europe should be complacent. It's not because we are ahead in developing the regulatory framework that we can rest and just take a break. So what is really next for us? How are we going to work on our strategic autonomy and our competitiveness in Europe? I believe, and many at the European Commission believe, although you wouldn't necessarily say so, that blockchain is truly, and distributed ledgers are truly transformational technology. I refuse to believe that stablecoins are it, that they are the killer application, the destiny of blockchain, the final frontier, that all of this blockchain puha is all about creating stablecoins. There are people who believe that, but I just do not believe that. I also refuse to believe that distributed ledger technology is all about Bitcoin or ETH or Solana or Cardano or any of the altcoins. These things are important. They're fascinating. But they are, in the global world, just currently about 3.7 to 4 trillion US dollars. Now that's a lot of money, but still, 3 to 4 trillion US dollars pales in comparison to the size of, for example, what people call real-world assets, financial assets, property, intellectual property, so real property, real estate, intellectual property, all financial assets, equity, bonds, derivatives, funds. If you add all of those together, you're not going to talk about 3 or 4 trillion dollars, but you're talking about dozens of trillions of dollars. I don't know what, it would be a humongous number. And most of those assets are currently locked up in paperwork and in centralized systems. that complicate the movement and the transaction of these assets, because these systems in which these assets are documented and held in can't communicate with each other, and transacting between them is incredibly, incredibly burdensome. Now, this provides huge opportunities for companies that specialize in exploiting inefficiency. It also provides huge opportunities for lawyers who love to go on about writing long documents about how to safeguard yourself in these complications. But society at large loses out from this inefficiency. So, what I believe we should be doing is to seize the opportunity that's ahead of us, which is we are at the cusp of seeing a re-platformization of our financial and transactional infrastructure through blockchains and through distributed ledgers. And that is what really is cooking in the global policy community, and Europe cannot miss out. Because if Europe does miss out on this, we are at risk of becoming what I call a flyover zone between, on the one hand, the United States, where they are really working on replatforming financial market infrastructures, and the Middle East and Asia, where a similar movement is abound. Now, what is required to seize the opportunity of this replatforming based on distributed ledgers of financial infrastructures, financial assets? A number of things are required, and most of them are not in the hands of the European Commission at all, so we can't do much about it, but we are watching whether the conditions are being fulfilled. And I have, and I don't want to go too much over time, but there are 5 essential conditions that have to be met before we can see this replatformization of the transactional economy. First, the buy and the sell side have to be ready for it. They have to want to have tokenized assets. A couple of years ago, they did not want this. They said blockchain is not for us. But now it is the #1 topic I am solicited on. Everyone wants to move in tokenization, both on the buy side and the sell side. And the sell side will act if the buy side is interested. Secondly, financial market infrastructures need to be blockchain enabled. They need to be open to blockchain. They need to be open to permissionless chains in particular in order to facilitate this. And they need to be open for, I would say, resilience, but also for reach. To avoid friction, we need financial market infrastructures to build on distributed ledgers. The third is a very technical issue, but tokenized assets, tokenized financial assets, need to be recognized as collateral in financial investment, because an investor is not interested in buying an asset if he or she cannot use that asset as collateral for something else. That is how finance works. Why do people buy bonds? Well, maybe to have a little bit of interest, a little bit of yield, but also to use those bonds as collateral for other activity. Why do people buy real estate? To use it as collateral for other things, and so on. So tokenized assets have to be recognized as collateral, and this is not currently the case yet. Fourth, capital standards for banks. Banks, financial institutions that have exposures to tokenized assets cannot be punished through the capital requirements they are subject to for holding tokenized assets, because otherwise it's going to become prohibitively expensive for banks to be in the tokenized space. And finally, and extremely, extremely important, for the tokenized economy to develop, we need to have cash on ledger. Cash on ledger is essential to settle transactions. And I'm not talking about just a few 100 billion stable coins. Currently we have about 290 billion stable coins around. It's not insignificant, but it's by no stretch of the imagination sufficient to meet the liquidity needs of a token-based economy. We will need vast amounts of cash on ledger. The amounts have to be so big that no private issuers can actually provide that liquidity. No group of banks can provide that liquidity. Only central banks have the elasticity that is necessary to meet the needs of a tokenized economy. So cash on ledger is essential. Then there's also something that could be helpful, and that's where the European Commission might have some influence, and that is that we need to have a supportive regulatory framework that helps, that is adapted to the DLT environment, to the tokenized environment, and that's why we are working on our DLT pilot regime 2.0. We have one which isn't really working very well because it's too constrained, too conservative, and we're working on a proposal which my colleagues are going to kill me if they heard me saying so. I want to put rocket fuel into the DLT pilot regime so that we can really launch something big. It's not because I want to put rocket fuel into it that there will be rocket fuel into it. I'm doing my best. But I have political authorities who do not believe that it's good to play around with rocket fuel. And then there are two nice-to-haves. It would be nice if we or member states could adapt their civil and their property law and adapt to the DLT environment. Whether it will happen in my lifetime, I don't know. And it would also be nice if tax policies and tax regimes would be adapted to the tokenized environment. I believe that in order to keep one's mental well-being, one is always best advised to stay away from tax policy and tax regulation. Therefore, I always stay away from tax policy. So I am going to do absolutely nothing to help tax policy along for the digital age. So, after we have acted on tokenizing, on the tokenized economy, not the MiCA territory, but everything else, the tokenization of everything, I think it will be time to revisit MiCA. Hopefully that will be in a few years' time only. And then we can look at MiCA and see, does it still need updating? What are the lessons learned from MiCA, but also how other nations have dealt with it? And have they improved on it? Is there something we can copy from it? So that's where I would like to leave it at. We are not working on a MiCA 2. We are very much focused on the tokenization of everything else because it is essential, absolutely foundationally essential for the competitiveness and the autonomy of the European region and to avoid that we become a flyover zone. Because I do not want Europe to become a blockchain or distributed ledger technology flyover zone. Before I conclude, one last mention. Although we're not working on a MiCA 2, there is a very big debate in the European Union about who should supervise crypto asset service providers. And there is momentum as part of the Capital Markets Union debate or the Savings and Investment Union debate to propose a number of operators to be put directly under the supervision of the European supervisory authorities. In this case, ESMA in Paris. And it is likely, although not yet decided, but likely that there will be a proposal pretty soon from the Commission that crypto asset service providers should also be considered for direct supervision at the European level. This will be a very big debate because some member states are very, very, very much in favor of this, and some member states are very, 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 very much against this. I have no idea where it will end up. It may be towards European supervision, it may stay where things are, but there will be a very big debate on the merits of centralized supervision. And global markets, European markets, would be more uniform if there would be centralized supervision. Whether they would be more innovative with centralized supervision, that remains to be seen. Thank you very much.